Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate filings so you don't have to. Today we're diving into Kodiak Gas Services' annual report, and let me tell you, this report is a wild ride, full of acquisitions, asset sales, and a whole lot of debt. It's like a high-stakes poker game in the energy sector. Let's decode. We'll start by painting a picture of who Kodiak is and what they do, then move on to the juicy stuff, risks, financials, and ultimately, what all this means for the company's future. Kodiak Gas Services is a big player in natural gas compression. Think of it like this: they're the folks who help keep the pressure up so natural gas can flow smoothly from the ground to your homes. They primarily work with upstream and midstream customers, meaning the companies that drill for and transport the gas. Their big move this year was acquiring CSI Compresco, another player in the compression game. We will talk more about this later. Before we go any further, let's clear out the alphabet soup. The filing uses a lot of abbreviated terms. Most of them are about finances or agreements, the most important being CSI Compresco, which is the firm they bought. One of the key things to understand is how Kodiak plans to integrate CSI Compresco. They're expecting that with CSI, they will be able to operate with more efficiency and synergy. When two businesses merge, it gives you the benefit of making some jobs redundant and making the whole company function better as a single unit. Now for the part that keeps executives up at night, the risk factors. The biggest risk to Kodiak is a drop in demand for natural gas or oil. This could happen for a number of reasons. A shift to renewable energy, new government regulations, or even just a change in the weather. Another key risk, they say, is losing a major customer or having a key customer have financial issues. It is critical for the company to retain its customer base. There is also significant competition. They also mention that in the case of a competitor suddenly lowering their prices, it can be hard to retain customers. They also face the risk of having short-term contracts. Given that customers can cancel with a short notice, this hurts their recurring revenue model. A good portion of Kodiak's business is concentrated in the Permian Basin and Eagle Ford Shale. While these areas are currently booming, any regional downturn could disproportionately affect Kodiak. Like many companies, Kodiak relies on debt to finance its operations, but it comes with some downsides. It restricts what they can do, like preventing them from borrowing money. There is also interest rate risk, meaning their debt can become more expensive if interest rates rise. Now let's move on to the financial side of things. The annual report is filled with financial statements, but let's zero in on the most important ones like operating revenue. For the year, we see contract services revenue at over $1 billion, specifically $1,034,173,000. The second source of revenue is other services at $125,138,000. The total revenues were $1,159,311,000, a great year of revenues. Operating expenses, on the other hand, can take a big bite out of your profits. Some examples are cost of operations for contract services of $355,016,000, and then for other services of $103,360,000. The biggest numbers on the expense chart, however, are depreciation and amortization at $260,272,000. One number I always check is the interest expense. This can give you an idea of the financial health of the company and how much debt the company is actually using, which we can see is nearly $200 million. This can get a little worrying. But the report shows that the company is doing great and can afford to pay good dividends to their shareholders, with a recent dividend payout of $0.41 per share. We also get share repurchases that the firm has been doing. Share repurchasing is a good signal of financial health, as it usually indicates there is money to spare and there is reason to believe it is a good investment. They also report on the total fleet horsepower of the company, which is up 35% from last year, mostly due to the acquisition of CSI Compresco. Next, Kodiak is heavily regulated and is impacted by regulatory bodies such as the EPA. Any regulation on their business can impact what and how they do things. For a few important things, there is also an outline of the code of conduct, the insider trading policies. Kodiak highlights its cybersecurity measures with a CIO, CISO, and dedicated team overseeing its IT systems. Despite these efforts, the company has experienced cyber incidents and acknowledges the ongoing threat, detailing incident response protocols and third-party vendor risk assessments. Another point that Kodiak notes is their relationship with EQT or EQT OB Group, who owns a significant part of their voting power. EQT is not limited in its ability to compete with Kodiak. Taking a look at some of the numbers Kodiak presents for their outlook on the future and predictions, here is what I would do. You should focus on investing long-term, look out for certain risks such as the weather and the climate shift. As well, consider other details from what you know about the energy sector. The report concludes with certifications of the CEO and CFO confirming the accuracy of the information presented. Now, let's zoom out and take a wider look at the forest and not the trees. So what's the verdict? Kodiak's acquisition of CSI Compressco has definitely bulked them up, but it also means taking on more debt. There are some high interest rates that could be concerning if the price of natural gas falls. They have significant power in the Permian Basin and Eagle Ford Shale, meaning any downturn there will hurt them more than others. However, their focus on large horsepower equipment seems smart. It is not all bad news, though. This business is known for generating stable cash flow, meaning as long as they focus on what they are doing, their profits can outweigh the risks. Ultimately, Kodiak seems to be betting big on the continued demand for natural gas, particularly in the Permian Basin. If that bet pays off, they're poised for a lot of money. If not, it could be a bumpy road ahead. That's all for today's Corporate Decoder. Don't forget to like, subscribe, and share your thoughts in the comments below.